you've made some comments about earnings being kind of mixed so far, and then you made an interesting point that CFOs may use the government shutdown as a way to massage guidance and lower expectations that they can eventually beat maybe in the future. But in near term, that might be disappointing. What kind of earnings season overall are you expecting here?
Well, so far we've been getting about 11% earnings growth, which sounds pretty good, but it's way down from 25% that was in the third quarter. And people are beginning to think about the full year 2019. Remember, we're still looking at the end of 2018 when we say 11% for the last quarter. We're now looking at 2019 around 6%, 5, 7, somewhere in that range. And people don't really know yet. It's very early in the year. So companies don't want to promise too much and then get slammed later in the year. They're going to do like Apple did and under-promise and say how terrible things are. They've got a great excuse. The shutdown is a great excuse. Slowdown in China, great excuse. They're going to do what they can to be, I think, a little bit more cautious in what they tell investors through this week and next week, through the end of the reporting season. And I think that may dampen expectations a little bit. So we'll see what the Fed has to say, whether they likewise will dampen expectations or simply say that the economy is pretty much where people had expected. But I think that does present some risk to stocks in the near term. Longer term, it sets up a very nice recovery through the rest of the year.
You think that, people need to own Apple probably, a lot of them, right? And obviously it was much cheaper than it had been. If I was going to get back in, if I were someone who had to own it for whatever reason, will that give it's happening so far this morning, but will that give a firmer tone to the stock market for at least a day or two, or no? It could be Boeing could just throw a wrench in the works when it reports.
I'm not going to predict day-to-day movements in the market. That's random noise. I'm looking at the longer term. The longer term says stocks are much more attractively priced now than they were 6 months ago, 3 months ago even. But at the same time, there's going to be volatility, and we may very well go back to the Christmas Eve lows. I can envision scenarios where enough companies have cautious earnings that people will get there. That would be a huge buying opportunity, in my opinion. We'll see if the market tests that or if it just keeps bouncing along and improving.
So, Torsten, Jay Powell, we've seen the evolution of Jay Powell since October. Do you think he's a true believer now in data dependency, and do you think he really has learned that he doesn't know where neutral is, or do you think he's still sort of itching to raise rates a couple of times, and he's just told the market what he wanted to hear, what it wanted to hear?
The problem with telling the market that we're data dependent is that the market doesn't know which data to look at. And first you get ISM that really was falling hard, which is a very important indicator and leading indicator for GDP and for consumer durables and for CapEx. And then 2 days later, you get the employment report doing really well. So should I look at all the negative data, which is sentiment included, housing data, or should I look at the bullish data that's been going on with the labor market? It gets it very difficult for the market to figure out what they're going to do.
And difficult for him, too. The reason I ask is we had a former Fed guy on yesterday who was Minneapolis, right, was where he was, right?
Yeah, former.
And then Kashkari's also from Minneapolis. They're both so dovish.
I think it's picked up his line of
right.
reasoning.
It must be like it's cold up there. Maybe they think the economy's never hot when they're up in.
Bullard too.
Well, he's in St. Louis, but Minneapolis is cold, always. So do they just? Why are they so dovish up there? Yesterday he was saying, look, there's no indication globally that inflation is a near-term issue, and that the Fed's not supposed to worry about unemployment being too low or employment being too strong. It's like that's their mandate. Get employment as strong as you can. So why tap the brakes if there's no inflation?
Oh, absolutely. That's also why the key mantra at the moment is that they are patient and flexible. And in some sense, this meeting is actually a little bit boring. Normally, there's a lot of action going into FOMC meetings, but here we're just waiting for them to say, show us some more data. We didn't have data because of the shutdown. Show us where this growth picture is going. And the big picture really still is that growth is slowing. So the question becomes, how quickly is it slowing? And is there any dramatic slowdown as a result of the trade war? That's not what we expect. But this is certainly a very important topic across all asset classes.
So you would be, if you had to bet a lot of money, and I don't know what a lot of money is to you, but if you had to, you would say how many hikes this year?
So we still believe that they will begin hiking later in June, but I mean, really is, thank you for today, see you in June, and we'll see where things go in the meantime. So the chances are still that the economy will be picking up later, but for now, they are absolutely very clearly on hold.
You trust Jay Powell to walk the line?
I think he's doing an outstanding job. Absolutely, because the thing is also for them...
Say the right things for the market today?
Well, the thing for them is that it is a challenge. I mean, what data should you look at when some data has been weakening, other has been softening, and particularly, I mean, been going in the right direction. And for them, it really is an whole issue that the soft data is coming down. And is that a leading indicator for the hard data? We'll see where the employment report in ADP today is telling us. But at the end of the day, they need to have an excuse for turning more dovish. You can't just expect them to turn dovish for no reason. And this is really important for markets. For them to turn dovish today or the next few meetings, they need to see the data deteriorating, and we just haven't seen enough deterioration. Even though some of the underlying trends are somewhat more worrying, still the picture is let's wait and see.